Away we go. All righty. Well, we are recording now. I think I did it right. This is my first time recording here on Zoom. So what's up? I am Russ, my Dapper Dividends channel. Many of you know and love, I hope. And I'm here with Joe, the rad dad investor. So what's up, Joe?
How's it going, man? Good to be on here. Thanks for inviting me.
Absolutely. Absolutely. Why not? Hey, we got to get our names out there. We got information to share. Yeah, we might not all be Graham Stevens or Andre Jicks, but we're knowledgeable individuals. And, so you're in Colorado. We were talking a little bit before. Why don't you give a little bit of your who you are? Why'd you get on YouTube? What made you want to do this crazy thing that we do?
Awesome. Great question. So basically my whole life, I've always, since a child, I've been kind of, I guess, frugal with my money, right? I've always wanted to have side hustles. I always wanted to keep earning and earn as much as I could. And as I got older, even in high school, I had multiple jobs. When I got into college, I had multiple jobs and I did consultant work. And I always had friends and family ask me for advice. They always came to me for some reason. So after a while, I thought to myself, I'm like, why would I want to, why am I just helping one person at a time when I can help out a large audience at once, right? So it took me many years to get over the fear because I'm an introvert. I like to stick to myself.
Me too.
I'd rather have 4 close friends and 100, whatever, associates or whatever it may be. So it was really hard for me to get over the fear of going on YouTube. So I finally did it, and it's super easy. Like I mentioned, I helped a lot of my friends maybe budgeting or working on their credit score or paying off bad debt or learning how to invest or day trade or getting into Bitcoin. I was early in the Bitcoin more so. I started 2016 as trading. I didn't really believe in Bitcoin at the time. I should have, right? And 2020 perspective. But when 2017, 2018 came around, I really got into it a lot more. And I've been a heavy holder into cryptocurrency ever since then. I've seen my net worth grow and grow and grow really rapidly quick.
Well, it's easy, right? Just spend less than you earn and invest the rest. Dude, you beat me. So I didn't invest till 2017. December of 2017 is when I first bought Bitcoin. And I had been looking at it in 2015 is when I became aware of it. And unfortunately, I bought some, and I've told this story before, I bought some physical gold instead, some gold coins, because I remember talking to my wife and I said, I really like this idea of Bitcoin and I think it could be disruptive, but if the power goes out, I can't use it, where at least the gold, I have it. And unfortunately, it took me a few years to finally jump in. But yeah, I mean, better late than never. And it's fun. Do you stake your crypto or do you do anything with it?
I actually do. I stake about 75% of my cryptocurrency. I probably always will. I don't see a huge downfall for that, although a lot of people try to say, don't do that. But I guess I'm more of a risk taker when it comes to things naturally. If I'm in cryptocurrency in general, that's automatically you're a little bit more riskier than most people out there, I would say. So I do stake it. I like that nice income coming in. It's just like a dividend stock essentially, but
that's what I was going to
build in.
It's my crypto dividends, I call it. I got Celsius. I keep bunch of Bitcoin and Ethereum and a few other small ones. But yeah, man, every Monday, Celsius gives me my crypto dividends. So hopefully that sticks around.
Yeah, I mean, you can't beat it. And I have, let's say I have Bitcoin, or I stake my Bitcoin, my Ethereum, and also my Sandbox Mana. Those are the three.
Okay. Nice. So I got to ask the rad dad investor so you're obviously a dad. How many cheerins you got, as we call
I just
them?
got one right now. Okay. Just turned 2.5. We're actually going to start probably trying this year for another one because we're getting older. I mean, we're both going to be 37 this year. So we started really late. We love to travel, right? We were kind of selfish when we were younger. We just traveled the world. And we wanted to get that out of the way before we started having kids. And luckily, because we just learned the hard way, we just most recently moved from Hawaii to Colorado. But in the meantime of that, we actually went over to Europe for 2 months with a toddler. Man, that was brutal.
Oh, I cannot even imagine.
yeah, that was kind of her last big hurrah, probably for the next, I don't know, 5 years, maybe 10 years, who knows, by doing a big trip like that. I think we'll probably stick, now that we live on the mainland, or the 48 states, we'll probably stick to a lot of like America or maybe Canada, maybe Mexico, keep it a lot closer trips with little kids now. So
Yeah, dude, we love to travel too. We love it. So do you do a 529 plan, any kind of investments for your?
I do not. 529 is really smart for some people, right? Like I've actually made a video, maybe 2 videos of this. The moment I found out I was going to be a dad, I went out and I opened up another brokerage account, essentially for my daughter now, right? I had it in my name, but I just started investing in her. Once she was born, we got her social security number, and then I transferred everything over to that brokerage account. So she's in a brokerage account.
Okay.
I invested, check out my video if you haven't. It's like my second or third video. I've only invested about $2,000 into my daughter's net worth. And right now with volatility, she's probably sitting at $13,000 for a 2-year-old for net worth.
Wow.
So
Wow.
she's doing really good. I got super lucky with timing. I bought Square like in the 70s, Tesla in the 45 range.
And that's awesome.
I got Neo in the $3 range.
Yeah.
So those stocks have just gone massive over the last few years. So she's definitely got lucky that way.
So what do you recommend if somebody wants to save for their kids? What do you recommend doing then? I mean, we have a 529. I started this when I found out we were pregnant with my first daughter way back in 2007. I put $50 a month away, and I just kept putting it in my dresser drawer. And then I had this stack of cash, and I told my wife, we got to do something with this. So then I went and found a 529, and it's grown pretty substantially. And I kept that going. I do $100 a month per kid just automatically. And I've just done that for years. Don't even think about it. So yeah, for us, it's worked out well, and hopefully,
that's awesome. And so like in my video, I mentioned like 529s are great, right? For people that know that their kids want to go to college. And maybe, correct me if I'm wrong, but I think it's very limited to just secondary, like a tech school or college or textbooks or something like that, right? So
I haven't looked too much into it, and I know I should, but I've seen, you'll see blog posts pop up about the 529 plans and, 10 things you don't know about them. So I know there's, the time isn't here yet. Like I was just telling you before it started, my oldest is getting ready to go to high school. So, a few more years, but that's the thing. I'm not as worried, because if we decide to do something else with it and they want to go the entrepreneurial route, I figure we could just pay the taxes on it and, the penalty, whatever, 10% or something.
Yeah. And I don't, like I said, I'm not super knowledgeable with the 529. So if that's an option, that's super nice. The biggest reason I just wanted to put it into a brokerage for her is because I didn't want to necessarily limit herself. Like if she wanted to put it down for starting her own business, or if she wanted it for putting down payment on her first house, or if she wanted to just travel the world and have life experiences, I wanted that to be her options. I look at it as I want to invest into my daughter's account for dreams that she doesn't even know she has yet.
Beautiful.
And she can even use it for school if she decides to go to. Like me and my wife, we went to college, right? So we're going to definitely encourage her to do that. But I think in today's age, especially my daughter's only 2, so 16 years from now, is college going to be a necessity? I
don't think so. I have serious doubts. And I know, I think Microsoft and I think Google both have their own certification. I don't know. I want to call it a degree. I don't think that's the right word, but I know they certify in-house, and a lot of places look at that almost more than college in some instances, because you're getting trained by Google specifically, and that carries a lot of weight, and it's kind of showing what you've done. And obviously I never went to college, but just graduating college doesn't mean that it shows that you're able to graduate college and you don't have any experience. And I know a lot of employers, they say, okay, what have you done? So is that in a custodial account then? I missed that.
Out my account. Yep. Out my brokerage. As soon as I got her social security number, I transferred it over. So it's technically in my name until she's 21. It depends on what state you live in. Some states are 18, some states are 21. I believe Colorado is 21. So it'll be in my name until she hits that age. Once that happens, she can do whatever she wants with it. Hopefully, like if she goes to school, then it's great for school or business, like I mentioned. But if she doesn't do any of that route, hopefully she just keeps it invested, right? Like that's one of the scariest things about it is if I don't teach my daughter the fundamentals of what the power of money brings to life, like she could just go out and blow it and it's just gone,
Yep.
like all that hard work that I did, for the first 21 years of her life, she could blow it. So
Yep.
a 529 might be a good thing if she has, bad money habits, I would say.
Well, we have both, and I've talked about on the channel. I have a custodial account for each of my kids. I opened up maybe 3 years ago, so not terribly too long. But we, instead of buying them extra gifts and presents and things, and I've encouraged family members to give, deposits cash, so we put cash in there and I let them pick. So it's kind of been fun. They wanted Disney. My youngest wanted Hasbro. McDonald's, they have Pepsi, they have a lot of Starbucks, dividend companies. So I think that's a pretty cool way of getting them interested. And when your daughter gets a little older, I think that would be awesome to just, because then they can watch it. And of course, the kids, I wish it was TikTok, maybe if TikTok had a stock, Rhymes, but anyway, it's, they know, and I love it that my wife has told me at times they've told friends that they own Starbucks, like they've gone to Starbucks and say, yeah, I own this. And their friends have no idea what they're talking about. So just that gives me a little bit of peace of mind knowing that they know that they actually legally own some of Starbucks, that they are a business owner in it.
Yeah.
And their friends have no clue what they're talking about. I think that's something that hopefully, like you said, they're not just going to turn 21 and blow the whole thing.
Right.
And, I got some years. I got a few years, thankfully, to hopefully, but no, that's great. So speaking of not blowing the whole thing, I mean, we were talking, obviously the title of the video is we're going to pick some, we're each going to give a stock that we like in a market crash. But what do you think about that? We think the market's probably going to crash. What is your thought on that? When do you have a catalyst? What do you think is going to do it?
Sure.
Any big concerns? What's your 1,000-foot view?
I'm not concerned at all, and I'm on the sidelines cheering for a market crash. When you have a long-term mindset, that's the best thing that could happen for us, right? That's when legacy money happens. Like, most people go in and they rush and they throw in their money at all-time highs. And statistically, that's the worst time to ever buy stocks. And I never buy it. Like, I love to buy stocks when they're ugly and I sell them when they're pretty, right?
Yeah.
So, what I think is going to happen, I mean, it's so bipolar right now, right? The market's going up and down. It's just very emotional. And I think everyone notices that. I think I made a video of this. I think the market could drop another 5% between now and when the Fed raises a rate. Now,
I hope it drops.
And that, I mean, look at these moves we've had. We've had 2 and 3% up and down days, right? So 5% is not actually that much. It just takes a little bit of a bad news, or if something happens with Russia invading
Ukraine,
like little things like that can where the market's so emotional that it can flip so quickly. And if the Fed raises more than 0.25%, let's say it goes to 0.5% in March, the market's going to freak out with that.
Well, they said 3. They got 3 rate hikes coming. I think I read that they're going to be, and it's long overdue. And yeah, they're going to try and curb inflation and hike interest rates. And I think that's kind of what I don't know if that's what caused the tech bubble. I mean, I was around for that. You were probably around for that. I remember people just saying to buy anything that had a .com, but I know interest rates were really low back then. And
I mean, I was only in 7th or 8th grade when that happened. So I wasn't in there at that time. I just know from what I've read and what I've heard about the tech bubble, a lot of people are comparing it to right now. I'm not in the camp of something like that's going to happen.
I unfortunately wasn't investing, but I do remember it was party time for this guy. I was so at 99, 2000, I was 21 and 22. So I do remember though, my uncle had a friend and I had a friend that both were day trading, and they kept telling me, dude, just buy anything that has a .com. They're like, if it's .com, buy it. And it's funny that you can read about it, but I remember that. And I kind of get that feeling when I saw anything that was EV was going up, anything that was blockchain was going up, anything that was cannabis was going up. And I mean, those have all kind of deflated a little bit, but it's weird that, I keep seeing this thing repeating where there's like a whole, niche. And it's just, if anything is in that, you buy it, you're going to make money. So, I don't know, but the rates rising but then again, the rates are so low that, it may not damage it much when they raise them. I mean, if we're sub-zero real rates and they raise it 3%, it's still not terrible. I don't know. It might not spook the market that much. I'm hoping, and it sounds bad. And, I feel bad for anybody that's retired and living on a fixed income, but, man, I'm waiting for a market crash. Because like you said, that's when some great fortunes are made in the midst of recessions.
Where do you think you're going to see the market over the next, let's say 3 to 6 months or till the end of the year? What do you think is going to happen?
Well, I've been thinking it's going to go down for quite some time, and I've been wrong consistently, but honestly, this is what I love doing, is that because I don't know where the market's going to go. And I always preach that over the life of the markets, they're gone up and to the right. And we've had those punctuations where we've had down years, but that's the portfolio I'm building with like the bridge account that I share here. I'm trying to buy those companies that aren't really affected by cycles, and they just have strong balance sheets, and they have cash flow that's always coming in. And it's just mostly predictable growing income. It's not as exciting, and you lose some of that big upside, but you know what? That's pretty much what I share on the channel. And because I don't know where the market's going, I've been waiting for a crash, and I'm glad I didn't just sit in cash. But, I'm hoping, because as we always say, when the yield goes down, or when screwed it up, when the share price goes down, the yield goes up, share price drops, the yield pops. So I'm excited, and I'm hoping that it will go down, but the damn thing is like a vampire. I mean, it's like a vampire, old Rasputin. I like to call it, I've called it the Rasputin market. It gets shot, poisoned, stabbed, and it just will not die. It just keeps going up. So, but basically I think, it's going to go down, but I've been saying that for a while. So,
the crazy thing too, is when rates rise, that's telling us the economy's doing good, right? The jobs report came out today. It was great, right?
Fantastic.
So, and it blows my mind. People are like, oh, the Fed's going to ruin the market. The Fed's going to raise the rates. So I'm going to sell before the market drops. Like, when you sell, you're the one that's creating that market fear, right? And the market dropping. And then you have these big hedge funds out there shorting stocks, right? That's just demolishing like the growth sector, and in particular, your Cathie Wood stocks, right? And not all of her stocks are great. Actually, a lot of them are super bad right now, right? But she has a key holding, and I couldn't imagine where her stock would be right now if Tesla wasn't a part of that, right?
She has speaking of Cathie Wood here, let me see if I can do this. She has there's an ETF, and let me pull up on Google.
Oh, the S-ARC?
Oh, you know it. Let's see what it's doing.
I've actually been in S-ARC.
Oh, have you?
Yeah, I've been in S-ARC for the last probably the third week I've been in it now.
Ooh, look at that. So year to date, look at it, was at $36 on January 3rd. It's at 51 now. It's not a very old one, I don't think.
No, I think 12th. It just started last year, if I remember correctly.
Yeah, November 12th, 2021, $31, and then it went as high as 49. So
yeah, and that was just the end of it was like a week ago, I think.
Yeah. Interesting. Yeah. SARC. That's crazy. I love it. The ETFs, people create all kinds of crazy things. So but again, I don't know now if we have a tech recovery, which could be led by, Facebook just is bringing everything down. And this is one of the problems I have with market cap weighted indexes, is that I don't even remember what the number was, like 40% of some of these ETFs that are market cap weighted are obviously all just Facebook, Amazon, Google, Netflix, just the big heavy hitters. Like I think there's
Tesla.
8 of them. Yeah, Tesla. So if like you have a Facebook drop 25%, well, that's going to really pull down hard some of these ETFs. And yeah, like you said, a lot of retail investors might just start dumping and selling. Funny thought, when you do that, you're effectively buying cash, right? You're converting your money into dollars, so you're buying the dollar.
Yeah.
Which I'm not big on. That's a melting ice cube, right? So,
and you know, like exactly, a ton of people tell, you know, and the smartest people, like even Warren Buffett, he has a ton of cash sitting on the sideline, right? And that's really smart. I have a hard time doing that though. When I have cash, I park it into a stock like Apple, right? And it's just sitting in there because Apple, give or take, it's always most likely going to go up. And I'd rather have my cash sitting in Apple than sitting on the sidelines. And then when there's a stock out there that I want to buy, I just pull it from Apple. And typically I never lose when I have my money in Apple, right? Statistically, there's only been a few pullbacks in Apple that's really hurt, but those have been great buying opportunities. So again, I just kind of treat Apple as my savings account.
All right. Well, speaking of buying opportunities, why don't you go first? So in a market crash, everything's on fire. The dumpster's burning. What are you reaching in to pull out? What's your number one stock right now that you would be just happy to buy, happy to back the Brinks truck up to?
I mean, I've been doing a lot of buying this last week. And I guess it depends on what type of market crash. Why is it crashing, right? Like, is it a tech bubble? Right. Or is it just fear of another virus potentially being out there? Or is it a fear of a war? Like, that's a little bit different, right? If like the financial crisis, like, you know, in 2008 when that happened, like that's particular, like, so again, it just depends on what type of crash it's happening. But I can tell you what I've been buying right now as the market's going down. And it's not technically a crash, right? The market's only down, 8% maybe right now. But I'll tell you what I've been buying this last week. Apple, for the stability. Like I said, I park cash into there. Believe it or not, Tesla is super stable to me. If you look at the charts right now is a decent time to buy it. Anything below 900, I don't mind throwing some money in. I'm not a heavy hitter. I won't load the boat into Tesla until it's under 800 again.
Let me look at my, let me pull it up.
You pulling up Tesla? Yeah. So I think Tesla ended around 920 today, maybe.
All right. So you're saying Tesla here about below 900?
I like Tesla below 900. I'd love Tesla like below 800 even more. I was buying it up heavy when it was in the 550 range, and it's crazy to me to think that I'm buying Tesla in the $900 range, right? Because I've been buying Tesla since $45. So
wow, that was pre-split range.
Pre-split, yeah, right? pre-split. Yeah. I think before that it was like 170 to 200. It was like my first buys before the splits.
Right now, I really don't see it hasn't gone below the 200 week moving average. It bounced off it, a few weeks ago.
I think didn't it bounce off it just last week, maybe?
Yeah, I'm on the daily. So yeah, that was last week. You're right. Well, it's 792. I'm shifted here to the weekly chart. I like the weekly chart where every candle's a week, as we see my ads pop up because I'm frugal and I'm cheap and I don't want to pay for an ad blocker. But when we zoom out, look at that. So Tesla has not gone below the 50 week moving average since, it didn't even really go in March of 20 or May of 20 March of 20.
Yeah. And it recently strong. Exploded. And I want to make a video of this, how I made 6 figures in 3 days while on vacation in Italy. Tesla just exploded when we were in Italy. I think it was in the end of October. Middle of October when this happened, when they announced Hertz was buying like 100,000 cars or something like that. Tesla, I think at the time was like $750, $850, something like that. And it went all the way up to $1,200 within like a week or so, 2 weeks. Like, it was absolutely insane. So Tesla's had a huge pullback. It's pulled back, 30 some percent from its all-time highs of just like 4 or 5 weeks ago. Or maybe it wasn't all-time highs 4 or 5 weeks ago, but it was pretty close to it.
What do you think about competition that's coming? Any concerns, any worries there with Tesla? And I mean, every car company is putting their EVs out.
did you see Ford's earnings this last day? Like,
Yeah,
I
it wasn't
mean,
very good.
it was awful. So like that makes me even more stoked for Tesla. Um, I honestly think like $900 right now. I wouldn't be surprised if Tesla hit the $1,500 to $1,700 range by the end of the year, given there's no huge market crash, right?
Yeah.
If market crashes, that it is what it is. But if the market can stay, somewhat stable, I wouldn't be surprised if Tesla saw that. I'm just a huge Tesla fanboy, though. I've been in it ever since, and I've believed in Elon Musk for a long time, before many people believed in Elon Musk. I loved Musk when Jim Cramer was hating on Musk. And in all honesty, when Jim Cramer hates something, that makes me more attracted to it, I would say.
Probably best to do the opposite.
Yeah. Exactly. When he starts hyping stuff up, it makes me nervous. Like, I want to start selling it, right? Because he usually hops on the bandwagon pretty, when everything's at the all-time highs roughly. So yeah, if I didn't invest in Elon Musk, which is tied to Tesla, I wouldn't be where I'm at today. I want to have the luxury, and many people probably don't know this because I don't talk about it on my channel that much, but I'm essentially retired. Like, I don't need to work. I don't work. I haven't worked for 2 years, 2.5 years. When I moved from Minneapolis down to Hawaii, I left my 6-figure job. And so the reason why I moved to Hawaii, just real quick, the reason I moved to Hawaii, I went on my honeymoon in 2013. I told my wife, I'm like, this is like so nice. I'm not stressed. I'm not thinking about work. This is the life. And we were sitting at a restaurant called Duke's in Waikiki. Okay. And I was like, we need to move here and I need to work here as a server. And my wife laughed at me so hard. Because at the time I was in a high paid job in marketing, right? And before that, I was in finances for 8 years. Just laughed at me. Went back to Minneapolis for 3.5 years. I worked my butt off. I started day trading more to make more money. I did consultant work on the weekend, side hustles, sold the house, moved to Hawaii for 5 years. And I worked part-time as a server for 5 years, right?
Wow.
So for the last 5-6 years, I've either been retired or worked 25 hours a week, but I haven't worked at all over the last 2 years. And that's also because Tesla. Like, I invested in Tesla so early that it's afforded me. And that's just one of my big winners. I have multiple winners, but that's the power of investing into the right companies.
Yeah, no, dude, that's what the whole, FIRE movement. Sometimes, you don't like the retired early to me because you want to be financially independent. And it just means that's what I'm going for. Be able to do what I want, when I want, with who I want, whenever I want, on my own terms. And unfortunately now I'm still paying, I always say, for the financial sins of my younger self. And I really didn't start getting serious about saving and investing and trying to save as much as I could until my late 30s. So it's, it's something that I preach to my kids and to everybody that's young and starting out. 10% saving should be the bare minimum, like the bare minimum. And now, we're at 25% just with my pre-tax income from my job. And then probably another 10% on top of that, just what I put into dividend stocks and whatnot and crypto. Yeah. And it's, you can't go back. The like they say, the best time to do something was yesterday. The second best time is today. So, but real quick for mine, I would go with Microsoft. They're just chronically overvalued. I think they're probably the healthiest company on the market. It's just incredible what they do. And real quick, I'll share the screen here. We'll hop on, everybody. That's a
great pick.
So I haven't pulled up from my Simply Safe dividends. Just a couple, 2.26 trillion market cap. Super safe dividend company. 13%. They've been growing the dividend for the last 10 years, 15 years of uninterrupted dividends. By the way, I'm loving this Simply Safe dividends. It just makes things for me really simple to have it all in here. But let me go down to the numbers. So this is one thing for anybody that's new watching. What I'm always looking for, me personally, I'm looking for the dividend yield to be above the 5-year average and the PE to be below, where Microsoft is completely reversed. The yield is below the 5-year average and the PE is above. So it's definitely overvalued, but I mean, I like to look at free cash flow payout ratio as opposed to earnings, because I'm sure earnings can be manipulated. But yeah,
Sure.
I mean,
like Amazon.
yeah, like Amazon. But yeah, I mean, $8.07 free cash flow per share. But what is just outstanding is the total sales. I mean, $185 billion is just almost every year up. And then they're decreasing their shares. And what is beautiful also about them, we'll just skim through here. No debt. They don't have any debt. And their interest coverage ratio, this is something I always love, is that, well, that's interesting because they have to, I guess they have some debt. I guess this number, what if they have more cash on hand? But with the interest coverage ratio, that's how much operating income you have to cover every dollar of interest expense. And they have $35.21 of operating income for every $1 of interest expense. So, there's no problems there. But I mean, obviously, they just had a blowout earnings. I did a video on them too about what I love is that the cloud, the Azure, and they're obviously buying Activision Blizzard, which creating a juggernaut to try and get into the gaming space and just dominate. And they want a gun for the top dog there. And
do you know, does Activation Blizzard, do they have any like meta exposure?
I don't know if they do, but they're mobile, so it probably wouldn't be a reach for them too. But I do know that the game streaming is what's really that's what Microsoft wants to go into. They have their I don't think it was called a Gamer Pass. I should have remembered what it's called. But yeah, they're going to basically be streaming everything to any device you have, whether it's your TV, phone, laptop, any device. I mean, probably the screen in your refrigerator, you can play your games if you want to, but they're solid. And unfortunately, they just always look too expensive to me, and I never find that right time to get in. So that would be for me, would be Microsoft. So real quick, I put this out there. If anybody had any questions, so we're going to go to the, you see, I didn't leave it up. I told you I was going to close it, didn't I? So what do you think of Microsoft? Would you ever invest in Microsoft?
Oh, I've been invested. I haven't been invested in them long. I bought them in 2017 or 2018. I've owned them since then. And I think I got them in the $90 range. So I've been invested ever since then. And honestly, it was nothing that at that time, I would never have invested in a stock like that. But one of my financial advisor friends from the bank that I used to work with, he's like, buy it, man. I'm like, like if you look at the chart at that time, it wasn't very impressive, right? So I just put a little chunk in there. I believed in this guy. Like he's never led me astray, essentially. So I put it in there and hold it ever since. And it's killer. I have it in a brokerage account that I don't even look at because it's one of those stocks that I can sleep at night and not worry about, So it's definitely.
You said it, Swan, sleep well at night. That goes for anything. Like when you said day trading, I went a little, I couldn't do it. I've tried day trading little bits and my problem is when I buy something, I just hold it like vice grips. I don't want to let it go. So that's why I've gravitated into dividend investing, because what I do is I buy and I'm going to plan on holding it for decades and get that yield on cost rising up and just keep reinvesting the dividends and the income. So it fits me like a glove. And I've tried trading. I just don't have the emotional fortitude for it. I can't do it.
And it's hard. Like I take losses all the time, right? But I need to get more wins than losses. And I only use about 5 to 10% of my net worth day trading. I have 25% in of my net worth into crypto, and the rest is in the stock market and then in real estate as well. So I like to day trade only about 10 different types of stocks. I don't day trade any and everything. There's 10 stocks that I know pretty well. And some of those stocks are in my long-term holdings, right? Like I also day trade them in my trading portfolio.
Yep, that's what they say. That I took a few Udemy courses on day trading, and that's what they said. Find like 5 or 10 stocks you really know. Anyway, so Johan Lorenzo said, during a market crash scenario, would you rather pick up a great growth stock for dirt cheap or a great dividend payer sporting a higher yield? So I'll let you go. Let you tackle that.
Man, that's a good question. I like that. Was it Johan?
Johan Lorenzo. Yes.
Mr. Lorenzo, great question. To me, it depends on the situation, right? Me personally, at my age, I'm 36. I'm more of an aggressive investor. I would go for the growth stock, a stable, trustworthy growth stock, right? One of the safest ones. I mean, Microsoft's considered a growth stock, and it has a dividend.
Crazy.
People might not buy it necessarily for the dividend because I think it's only 1%, 1.5%.
It's 0.81 right now.
Yeah, so
it's so low.
Just like Apple, right? Like people don't buy Apple for the dividend; they buy it for the stability. And if a market crash happens, Apple's not going to go down 50%, right? It's going to go down 20% maybe, and that's okay because you know that company's not going anywhere and it's always going to come back up. So I would put my money to work in a stable, trustworthy, like top growth stock. I would say Apple, Microsoft, Google, and the FANGs are sexy in my opinion in a market crash. What was it, like 10 years ago, the market started crashing. Oil is doing really bad, right? So the market started crashing. So when I look at oil stocks, probably not. If that was the case, oil's getting ready to hit $100 a barrel right now, right?
Yep.
I'm starting my biggest dividend stock is EPD. That thing, do you own that or do you know anything about it?
Enterprise Partners, yeah. Yeah, it's a MLP.
Yeah, I get over $3,000 a quarter in dividends from that. I'm starting to sell off a little bit right now because I think oil's at 94 a barrel. I think oil can go up a little bit more. But from that point on, I think it's going to dip down a little bit. And at that point, your oil stocks or your EPD stocks, stuff like that's going to start dipping down. And I'm going to buy it back. I'm never not going to own EPD, at least for the foreseeable future. So that's one I would dip into under $22. And nice. I'm sure I'll have a chance for that. But that's probably a long answer to your question. But growth stocks is what I would buy in a time the market crashes, as long as it's the fundamentals of the business have not changed.
There you go. Yeah. Yeah. For me, I'm obviously looking at dividend stocks, and we already said, Microsoft, like you said, I mean, why not a growth stock that pays a dividend? And that's a mental block I've had, because sometimes I get focused on like a 2.5% starting yield, and I'll just kind of ignore all those that are especially under 1%. I almost think it's not worth my time. And unfortunately, that's how we live and we learn. But it goes both ways. I'll tell people you can't just look at high yields, but I'm also guilty of ignoring low yields. So some
of the best low yielding stocks. I mean, look at Nvidia. It's a joke. It pays like a penny, I think, a share or something like that.
Yeah, it's low. It's really low.
But I mean, look what it's done. It's been unbelievable. And Apple and Microsoft, the only reason their dividends are so low is because they've had massive growth. So they used to pay decent dividends. I think when I first started buying Apple, I think it was in the 2.5% range.
Yeah, it wasn't anywhere where it is now. Yeah.
I think Microsoft might have been 3% when I first started buying it, so I'm still getting those dividends.
Oh, your yield on cost has to be sick.
Yeah. So it's doing well. So that was a great question though. And again, to me, it just depends on why the market is crashing itself. So.
And it's knowing yourself, knowing what kind of investor you are. And the only way you're going to learn is getting in there, putting your money out there. And, I like to think of it that way, that you can read, you can listen to what we say, but until you get your money out there in the market, you don't have skin in the game, as they say. So, Hey man, well, I enjoyed it. We don't want to keep people too long, but any final thoughts? Where can people reach you? Obviously you got your Rad Dad Investor channel.
Yeah, I'm a Rad Dad Investor, or the Rad Dad Investor on YouTube. I just started Instagram like 2 weeks ago, really posting stuff. Just started my Twitter like 2 weeks ago. I don't think I have any followers on Twitter, and I think I only have like 70 followers on Instagram. But and I don't have many followers on YouTube either. I think I'm only at like 308 right now. But the super awesome thing I'm super stoked about is this time last month, I was only at 164 subscribers. So I've pretty much almost doubled my subscribers in the last 30 days. My goals hit 500 by April Fool's Day and 1,000 by the end of June. So I'm just trying to get on your level, man. That's all I want. I want to get on your level, and I want to be eye to eye. So I'm looking forward to that.
It's been a lot of trial and error here. So yeah, some of my earlier videos were just, I went through this experiment where I tried to do a video a day for a whole year. I think I made it like, I don't know, 3 months in, 3.5 months. And it was awful. It was
That's
really
a lot of
bad.
work. That's a lot of,
yeah, but the videos were really low quality. They're pretty bad. So
I'm sorry, go ahead.
No, just I've learned the hard way, and people that have been with me for a while, they kind of know.
I can't imagine. I spent a good 5 to 8 hours of video from the time writing the script, recording it, editing it. Like, it takes me that long. So I'm still trying to learn on doing that. But
I will say I've gotten better.
Yeah, you're doing good, man. You got it figured out already.
Well,
one last question for you, and then we'll let everybody go.
What's up?
Are you buying any stocks right now, or are you?
I'm always buying stock. I've today I just bought 2. I bought a share of Leggett and Platt, ticker LEG, and my share of PepsiCo, ticker PEP, which is a bit overvalued, but I wanted to get to 100 shares, so I figured I'd start a little experiment, buying 1 share a week, every single week, regardless of price. And I just bought the 86th share. So for 86 weeks, I've been buying 1 share of Pepsi. And one funny thing is that I remember thinking when it went to $141 a share, I said, dude, this thing is so overvalued. I can't believe I'm doing this and buying it here. And I just bought a share a few weeks ago at like 175. But you know, I'm running the experiment. I want to hold PepsiCo for decades. Yeah. And I think they have a really good moat, and I like the company. And it was a company I pegged that I'm comfortable holding for a long time. And even if they should pull back, then I'm okay with that. So yeah. So I'm always buying PepsiCo, and there's always stocks I'm buying. We're always looking at stuff, but PepsiCo, and I bought Leggett and Platt.
Well, PepsiCo's not going anywhere. Everyone loves their sugar water.
Dude, they got hard Mountain Dew coming out. It's gonna be soon. Like alcoholic liquor? Mountain Dew, yeah.
Okay. Like what? Like a 5% maybe, or are they looking at heavier?
I don't remember the percent, but there's Baja Blast, original flavor, and I don't know if I want to say Code Red, but yeah, they're. And then they had Lay's vodka out too. That was a limited run.
Nice. I like that. That's
cool. I like that Pepsi's not afraid to throw stuff at the wall and get a little crazy and see what sticks and what doesn't. So
yeah.
Well, this was fun, dude. I appreciate it. And yeah, check out Joe's channel, The Rad Dad Investor. And we'll be seeing you later. So take it easy.
Man. Thank you. All right, take care, guys.